The ASX is expected to follow the lead of Wall Street this morning, at least in the early stages. In a rough start to the trading week, there was a panic-fueled sell-off of AI titans, including Nvidia and Broadcom. What's it about? Well, concerns that a cheaper artificial intelligence model from China, it's called DeepSeek, threatens to derail the dominance of the US tech sector. For more on this, Scott Phillips, the Chief Investment Officer at the Motley, joins us. Can it really derail those tech titans, Scott?
Pete, good morning. Yeah, I mean, it can, yeah. This is the challenge with AI generally, mate. So much, I'll say hype, it is hype. So much hype, so much expectation, so much has been built into share prices, assuming that the market is going to go a particular way. And whenever you get that sort of thing in markets, you open a massive risk of a trapdoor fall like we saw today. Nvidia shares down 18% only a couple of moments ago. Basically, at the end of the day, the number of chips required and who owns the technology that ends up winning will be pretty consequential. Now, I'm not someone who thinks there's going to be trillions of dollars made in AI companies directly. I think it's far more likely companies using that AI do well. Think about everyone from Woolies to BHP and everyone else using that AI like the internet, right? No one made a fortune out of the internet. Companies use the internet to do really good things. AI is probably, in my view, going to be the same. The problem was the market had bet that Nvidia was going to provide all of these chips to all of these companies and had bet that things like ChatGPT, Meta has its own AI, Twitter or X is working on its. The idea that that version of AI would be the dominant and final winner also means all the money went that way. Now, DeepSeek out of China is supposed to, now it's behind the Great Firewall in part, so we don't know exactly what's going on. They claim they're using a whole lot less chips, or many fewer chips, to create the same outcomes. In other words, a much, much cheaper, less compute power, less chips required. And if that is true, then it undermines all of the expectations. That kind of, you draw a straight line graph and say, this will grow at this rate. If you need a quarter, a fifth, a tenth of the number of chips to do the work, all of a sudden that changes materially who wins, because, again, it's more expensive for ChatGPT, for example, than for DeepSeek to find the same answer. If you've got a cost benefit or cost, if you're more cost competitive by a factor of 2, 3, or 4, that is going to drive really significant changes. So that's what's caught Wall Street on the hop overnight. By the way, Nvidia shares down 18%, still up 90% for the past year. So perspective matters if you zoom out a little bit. This is probably, I suspect, a popping of the hype bubble. Now, not the AI bubble in broad terms. That may or may not happen. But this is just straight out, hey, we thought everything was going to be beer and Skittles. Turns out maybe it's not. And people just rushed to the exits this morning.
All right, we'll see how that develops. Thank you, Scott. Good to see you. Talk to you soon.
Thanks, Pete.